We now all understand the concept of fake news, and we know the media plays with our emotions, our fear and our greed to try and get us to read their articles, click on their links. Well, today I want to discuss with you a number of things the media won't tell you about property investing that you should know. In my mindset moment, I'm going to share something with you that's helped me through my difficult times, and then I'm going to replay a radio interview I did a little while ago with Laurie Atlas, helping you understand how you can make your kids become more successful and richer later in life. And even if you haven't got kids yet or you're not planning to have children, there are some messages in it for you because one day, long ago, you were a child. So welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted our leading expert in wealth creation. That's the 5th time he's won a similar award in the last 7 years.
Welcome, because if you're listening to this show the day it's published, it's Christmas Day, and for those of you who follow that faith, Merry Christmas. For the rest of you, have a happy holiday season. And it's the holiday season for Pam and me as well, because tomorrow we're going off on our almost 7-week vacation. We're very lucky that we've built a property portfolio and a business that's given us a choice of the lifestyle that we want and the financial freedom we want. And that's what this show's about, to give you some better education, stop you making mistakes so that you can build the lifestyle you want as well. Now, we're going off for 6 weeks to Italy, but I've pre-recorded all the shows. So once a week, you're still going to be getting the Michael Yardney podcast every Tuesday. And once a month, we're still doing our Rich Habits, Poor Habits podcasts while I'm away. So nothing is different, but you can be different if you actually learn, if you improve. So hope you had a great year in 2018, and let's make 2019 an even better year. And I'm going to start that off with my show today by explaining to you a bit about what the media isn't telling you. See, we heard about the concept of fake news, and we know that the media likes getting our attention with fear and greed and clickbait, but I'm going to share with you a number of things that the media hasn't told you about property investment that if you want to be successful with it, you should really know. In my mindset moment, I'm going to explain to you a bit about how the elephant keeps walking while the dogs bark. What's all that about? You're going to find out real soon. And it's a message that has given me comfort when I've had difficult times. I'll let you work out which of the two animals I am. And then I'm going to replay an interview I did a short while ago on Laurie Atlas's radio program in central Queensland. Now, I've got a lot of different regular radio and television segments, but I love my chats with Laurie. You're going to understand why when you hear how he handles the topic of how rich parents create rich kids and how you can become a super parent. And even if you're not a parent or planning to be one, because you were one day a child, your parents have affected the way you think about money. So this is going to be a great session. I look forward to sharing these concepts with you. So let's get on with the show. Since you're interested in property or success, if you're like me, you probably listen to lots of podcasts, read blogs, buy magazines. I'd like to share with you 6 things it's unlikely the financial media is going to tell you about property investment, because sadly lots of investors go through their entire property journey believing some of these myths, and that's a shame. You see, most financial publications are going to shy away from highlighting the potential downsides of investing in property. Maybe there are obvious reasons. However, if you're a serious property investor, it's important to be aware of these. So the first thing the media is unlikely to tell you is that while property investment is simple, it's not easy. Now, that's not a play on words. Just because something's simple to understand doesn't mean it's easy to do or to make money from. If property investment was easy, there'd be lots more people owning more than 1 or 2 investment properties. In fact, there'd be lots of people owning an investment property. So here are some sobering statistics. It's been shown that half of those people who get involved in property investment sell up in the first 5 years. About 20% of them sell up in the first year. Of those who stay in the game, 92% never get past their second investment property. In fact, the latest statistics from the Australian Taxation Office shows in the whole of Australia, all the property investors, there's only 19,200 or so who own 6 or more investment properties. That's it. So they're not going to tell you that property investment isn't easy. They're going to make it sound easy by 7 properties in 7 minutes or 10 properties in 10 years. Of course, property investment is relatively simple if you follow a time-tested, proven strategy. The problem is that most of us act irrationally and emotionally when it comes to money. Some of us are too cautious and stay in their comfort zone. We invest in our own backyards, while others are in too much of a hurry and chase the next hotspot. Now, another thing the financial media is unlikely to tell you about property investment is that it's going to take you up to 30 years to become financially free through property. Despite what you've heard, it does take time to get rich. Wealth is the transfer of money from the impatient to the patient. See, it takes a couple of good long property cycles to establish a large asset base, and you've got to be able to hold the properties through that cycle. However, most investors, I find, waste the first 5, 10, sometimes even 15 years buying the wrong investments, and then they've got to undo and unravel the strategies. So they keep trying new strategies, new ideas, rather than going for the time-tested ones, because they're doing it the wrong way. They're chasing cash flow rather than capital growth. But the good news is, with the right strategy, you can speed up the process and achieve your financial freedom sooner. Of course, if you've got a mentor and independent advisors on your side, that'll help you immensely. They'll help you guide you through the right ideas and help you grow your property portfolio more quickly. But I think more importantly, they're going to stop you making the mistakes lots of investors make. Another thing the media is unlikely to tell you is that residential real estate's a high growth, relatively low yield investment. In fact, they'll often play up the game of you getting cash flow from your real estate. If you're looking to get cash flow from residential real estate, you better rethink your strategy. As a property investor, in my mind, your job is to build a substantial asset base, not to get cash flow. Look, of course you need cash flow. You need cash flow to keep you in the game, to help pay the mortgages. But buying an investment property is not going to pay for your school fees or not going to pay for your holidays. In fact, it's unlikely even to pay for itself in the early years. It's capital growth that's going to make you rich that gets out of your day job. If you think about it, when you retire, most of the money you will have, most of the assets you will have, is not rent that you've collected, it's not tax that you've saved, it's not positive cash flow, it's going to be the tax-free capital growth that you've got out of your properties. So growing wealth as a property investor involves 3 stages, and you've heard me say this before. Number 1 is the accumulation stage. So the first stage of your wealth creation journey involves focusing on growing your asset base. The second stage is the transition stage. Now's the stage where you start to lower your loan-to-value ratios. Now, if you've bought the right investment properties, the capital growth of those properties is going to help you anyway by naturally lowering your loan-to-value ratios, and eventually, over time, then you're going to be able to live off your cash machine with your preferred strategies, living off equity, living off rents, whatever. But number 1, your job is to actually build an asset base, because once you've got an asset base, then you're going to have choices. Here's another thing the media is unlikely to tell you, and that's that the banks are not on your side. Look, let's be blunt. Banks are in the business to make profit. That means the banks want to make money out of you. This doesn't mean bankers aren't trustworthy, but beware of the mortgages that they sell or the other products that they sell. They may not be in your best interest. So, in my mind, it's best to have an independent finance strategist on your side because they'll help you through the maze with the banks. Another thing the financial media won't tell you is that no one really knows where the markets are heading because they love putting the forecasts in their magazines and their newsletters and their blogs. No matter how much data is quoted or analysed, the bottom line is no one really accurately can predict how the markets are going to behave in the future. So if you're counting on your properties to keep growing at a particular rate, or if you're looking for the next hotspot, you could be sorely disappointed. Instead, I believe you should be treating your properties like a business. You know, I've spoken a lot about buying investment-grade properties. If you're not sure what an investment-grade property is, go to Michael Yardney podcast or to iTunes or Stitcher or Google Play or wherever you're listening to this podcast and go back to episode number 1 where I explain what an investment-grade property is. So number one, buy an investment grade property, hold it in the long term, make sure you've got sufficient financial buffers to cover interest rate rises, vacancies, maintenance issues, or any other surprises, because the media doesn't tell you that there's always surprises. There's always an X factor. So all the best laid forecasts are messed up by either an out of the blue surprise or by human emotions, because for what we think are rational people, we don't behave very rationally. There's all this herd behaviour where we push the market up too high or push it down too low. Another thing the media doesn't tell you is that there's not one property market. You know, they keep talking about the Australian property market or the Sydney or Brisbane or Melbourne property market. But the truth is each state's at its own stage in the cycle, and within each of those state markets, there are markets, different price points, different types of property, different geographic locations. So when the media tells you the market is doing this or the market is doing that, don't believe them. Sure, it's important to have a big picture view of what's going on, but you've got to have a micro view in the suburbs you're looking at, the suburbs you're investing. This way you won't miss out on great opportunities. So as you can see, there's lots of confusing information about property investment out there, and it's important to have a pragmatic eye, to get a level of perspective, and only get advice from independent people, somebody who hasn't got anything to sell you. That's going to go a long way to helping you succeed as an investor. Remember, it's your money. Be careful what you read and be careful who you listen to. Before I share my mindset moment and that great interview with Laurie Atlas, boy, you're going to love that because I hope you're going to like his style. I want to just let you know that I've upgraded the first book I wrote, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. Now, at that time I called it Insider Secrets That Could Make You Seriously Rich, and I'm so proud of it because I regularly get emails from people I haven't met who say to me, I bought your book at the airport, I read it in the library, and boy has it changed my life. Anyway, it's now 12 years on, the markets have changed and strategic investors have to adapt, and that's why I've fully updated it for the current market. So if you're a serious property investor, you've got to get your own copy of How to Grow a Multi-Million-Dollar Property Portfolio. This is the 12th anniversary edition, the 6th total update. But to help launch it, I've put together a special offer where if you buy a copy of my updated book, I'm going to gift you a copy of What Every Property Investor Needs to Know About Finance, Tax and the Law. Now that's a 2-for-1 offer. I'm actually not going to make anything out of this because, look, I don't know if you know how it works. The royalties are very low on this and I've got to buy my books because they come from a publisher. But it's my way of giving you a gift for the holiday season. So 2 books for the price of 1. There's a link at the bottom of the show notes that's going to tell you where to go to get your copies of my best-selling books.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset moment, I'd like to teach you about a lesson I learned about elephants who keep walking as the dogs keep barking. Now, before you wonder what I'm about, let me remind you that each week in my mindset moment, I like to remind you that for you to grow to the next level in business, in life, in property investment, you have to change. You've got to change the way you think so that your results are different. And that's why I say things like you're never going to drive a Ferrari with the engine of a Hyundai. Well, today I'm going to talk a bit about criticism. Have you been criticised? How do you take it? I know I've built a successful career around giving people advice about helping them get financially independent. And at times, that very success that I've achieved has made me the target of criticism. Not helpful, constructive criticism, which I'm happy to accept, but nasty feedback, sometimes entirely disconnected from the facts. Now, when I first started to encounter this blowback, I was angry. I was confused. Angry at how my work had been misinterpreted and misconstrued. Confused by why people would bother to attack me. Was it jealousy? Was it the tall poppy syndrome? Was it competitors who knew no better way of doing things? And then I learned to be an elephant. A wise teacher from India shared this insight. The elephant keeps walking as the dogs keep barking. The sad fact is that we all have to navigate our way around the dogs in our career. External critics, competitors, horrible bosses or colleagues who tend to undermine you. And based on my experience, I'd advise you to prepare for the yapping, because that's going to increase along the way the more successful you are. It's unfortunate, but that's the way it is. And you know what? You can't tame the barking dogs, but you have it within your power to completely tune out from them by being an elephant that keeps walking while the dogs keep barking. Channeling your inner elephant is a healthy exercise. It's in being focused on who you are and what you believe in, rather than letting those around you define you. The only thing that matters is what you know to be true about your goals and your intentions. Everything else is noise. So while the world would definitely be a better place without the vindictive and misinformed dogs, I've learned to make peace with their existence, and I've used it to my advantage. Being an elephant's made me stronger and more resolute. It's helped me become even more compassionate, and it delights me to turn the dog's vitriol into my virtue. When things have gone wrong, when people have knocked me, when things have turned against me, it's actually empowered me to go to the next level. So rather than argue with them, rather than fight with them, rather than engage with them, I've just shown them I've become more successful. And by doing so, I've kept being the elephant walking while the dogs keep yapping. I have a number of regular radio segments, but I always love my conversations with Laurie Atlas from 4RO in central Queensland because, well, you'll understand why in just a moment when you hear the interview. He'd recently read my book, Rich Habits, Poor Habits, loved my comments about how super parents bring up super kids and average parents bring up poor kids. So let's have a listen to a segment of his podcast, which was a replay of my interview on his radio show.
When you spend your lifetime trying to get your hands on the Holy Grail.
Michael Yardney is on the line. 11 things super parents do to raise their kids to become rich. Well, here's a list of things they don't do. They don't raise their kids to have dependence on the government. They don't teach their kids to defy the law. They don't teach their kids to resent the rich. They don't instill in their kids a poor work ethic. They don't instill in their kids that they're somehow entitled. They don't give them gambling habits, drugs. They don't teach them to overeat. And they teach them to not waste time. Michael Yardney, the lovies are going to loathe you for this.
Yes, they are. But in fact, we are our children's mentors. When you think about it, where do they learn all these things? So science has shown that by the age of 9, we've learned most of our habits. And interestingly, these habits come from our parents. We mirror our parents' thinking, our habits, our emotions. Laurie, I don't know if you've noticed as you get older, I speak to people and I say you become more like your parents. They say, no, I'm not. Mm-hmm. And then I say, well, look at your spouse, your husband, your wife. They've become more like their parent, haven't they? And they say, yeah, that's right.
Yeah.
And so we've learned a lot. And then as an adult, we go on doing these things we've learned, things we've heard, things we've seen as a child that are probably no longer relevant today, Laurie.
Now, they may or may not be elected in a year's time, maybe 8 months' time, but we have a Prime Minister on the way who is going to run a whole campaign based on the politics of envy. And
yes,
that is actually a huge shame. There's probably a lot of good things about a Bill Shorten Prime Minister Labor government, but one of them that it's not is this politics of envy, that the rich are evil, they're stealing from us. Yeah.
Well, that's what we heard as a child, dirty money, filthy rich. And if you're a good person, and most of us are, and you want to be good, and then you want to become a bit more successful, then you have these negative thoughts that you've heard as a child, and you wonder, well, maybe I shouldn't be wealthy, because in fact the wealthy people contribute, give back to the community. I believe that's a necessity. And so you should not envy them. You should not be jealous of them. You should be pleased about them. Because in Australia, different to other parts of the world, everyone has the ability to become successful. We've got a lovely country. We live in the best time of history, in the best place in the world. And so we can actually aspire to and should aspire to be wealthy and rich rather than envy them and creep past them, Laurie.
Which is one of the things I loved when I spent a year in America many years ago. I don't know if that's the case now under Trump. I haven't been there for 10, 15 years. But when I was there 10, 15 years ago, if you were rich in America, or if you were famous in America, or if you were successful in America, they'd go, good on you. Good on you.
Well,
I want to be you. I don't loathe you. I want to be you.
Laurie, that's right. The book I wrote recently, Rich Habits, Poor Habits, with Tom Corley, he's an American. He's done a study of the wealthy and the poor there. And when I described to him the tall poppy syndrome, he asked, what's that? He'd never even heard about it. When I did my study, I found out it's an Australian thing. Yeah. Why don't we allow people to grow to their potential, Laurie?
Exactly. Now, I make a rule. That's why I've got you on. I make a rule. I don't tell other people how to parent, because there, by the grace of God, go I. But here's Michael Yardney. He's going to give you a few tips on how to parent, and they're really simple. Make your kids read every day. I don't know. That's not rocket science.
Well, Laurie, I'm a parent of 4 children, and in my blended family, I actually have 6 children, and I've got 10 grandchildren. But I'm not a super parent. I actually am proud of what my kids have become. But what I'm going to share now is coming out of a study that was done by Tom Corley, the co-author of my book, Rich Habits, Poor Habits, and he studied and tabulated, because he's an accountant, and he did all these big spreadsheets and found that this is scientifically backed, the fact that super parents teach their kids about self-education, and they're taught to read. They actually review their kids' homework. They become their kids' accountability partner. They limit their consumption of TV and the internet and video games. Yeah. They teach them to exercise. And all these things have shown that not only do they become more fulfilled in their lives and enjoy them, they get better school grades, and they become more successful and rich. So what he did was see what these wealthy people, the self-made millionaires. So these weren't people who inherited money. These are people who went on and made it by being successful. So their parents punished them for losing their temper. We're not allowed to do that nowadays, are you?
No. Well, you can speak to them forcefully.
Sorry, I overspoke you.
It's amazing what you can do and what you can accomplish in life if you switch off the damn TV. It's incredible what you can do. It's amazing. You just buy yourself an incredible amount of time.
And you're not allowed to make excuses. You're not allowed to blame others. But adults do that too. So we started to say before, it's the government's fault, it's the Labor's fault, and the interest rates have gone up, it's the property market's fault, it's the economy's fault. When I stopped blaming others, Laurie, and I took responsibility, I realised I could get to the next level. So I've realised that where I am today is because of everything I've chosen to do and everything else I've chosen not to do. And I can't blame others, but the really good thing is I can do different things today, so I still can improve my life, and we can improve our kids' life because we're our kids' mentors. So it is important. It's our responsibility. So the wealth gap in Australia is a parent gap.
Exactly. And now, of course, what we do is we send them to school, and we expect our teachers to instill in them everything. They're there to teach them the 4 R's, and give them an education. They're not there to parent. I think we think our teachers are paid parents, so we don't have to do it.
Now, a couple of my kids are teachers. I have a lot of respect for teachers, but in general, teachers, while they're lovely people, are not talking much about money or finance. So what we're talking about is wanting your kids to be successful and rich. And so they tend to bring down people to the average. You're not allowed to excel. Remember in the old days, you actually could be the first in the class or the second in the class. Now everyone's got to be average. I'm not sure the school's the right place to teach you to be successful, Laurie.
No. So it has to be changed in the home? Has the school system flown the coop, has it?
Well, no, the school system's teaching education, but the school system has never taught us financial education, business education, success education. So parents have to first realise, how's my life going? Am I where I want to be financially? Now, it's not all about money. True wealth has nothing to do with how much money you've got. I've actually learned that rich people are actually very poor because all they've got is money. Wealthy people have got money plus relationships, money plus love, money plus the time to contribute back to the community, money plus health. no use having all this money and being a miserable person. So I'm not just talking about money, but to be successful in general, you've got to realise, well, where am I in life now? Am I okay? Am I where I want to be? And if not, why not? So it starts with the parents recognising where they are, and they're probably living somebody else's life. Their parents taught them to get a job or get a profession that they didn't want to, or they're working for somebody who's doing what their parents told them to do. So start looking at yourself, and then look at how you can help your kids become successful. You're their model.
And teach them to look at life in a half-full way rather than a half-empty way.
Totally, that's right. And it's interesting because, as I said a moment ago, where do kids learn these things from? You don't come out of the womb knowing how to do money or relationships or success. So they not only hear what you say, but they see what you do. And they hear when there's arguments or fights about money, or they see if you're sitting there turning off after the day with the beer in front of TV and watching this reality TV, what difference do they know?
Here's the takeaway from Rich Habits, Poor Habits, written by my guest Michael Yardney and his co-author Tom Corley. Now, they have been churlish enough to suggest, Michael, I'm worried for you. You have been churlish enough to suggest that parents are responsible for poverty, the wealth gap, and income inequality, not the stock market, not the economy, not the 1% that are rich and wealthy and nasty and rude and don't pay enough tax, not government policies, not your life circumstances. I'm worried for you, Michael. You're suggesting we need to look in the mirror.
Unfortunately, that's true. And I know some people are going to resonate with this and some are not going to. They're going to get offended. They're going to get upset, aren't they, Laurie?
Do you get pushback from I mean, look, Michael, there's a lot of lovies out there. Do you get pushback from the lovies?
Yes, we do. So, but this is not unusual. And so when we talk about money, some people don't want to hear about that. We talk about success. They don't want to, because there's always people out there trying to stop other people's success in Australia, as you said. Yeah. And it's because they feel if somebody else has done it, why haven't I? They feel a bit embarrassed. They feel a bit ashamed. And that's not necessary. It's not right. You don't have to feel that way. So say, if somebody else can do it, I can do it. Not why should they? Why were they lucky? If they could do it, there must be a reason why they were able to. What can I learn from them? Why can't I do the same?
It's called Rich Habits, Poor Habits. Grab it. Michael Yardney and Tom Corley's book. Michael, I've enjoyed the chat.
My pleasure, Laurie.
Thank you so much. Take care of yourself. Bye.
Thank you, mate. Bye.
Let's run through those 11 things for you. I don't like the term super parents either, but it's a term. All right. So parents like Michael was talking about make their kids read every day for self-education. They review their kids' homework. They take an interest. They limit the consumption of TV, use of internet and video game playtime to 1 hour or less. They make their kids exercise aerobically for maybe 30 minutes, 4 days a week. They punish their kids if they lose their temper. They punish their kids for saying inappropriate things. They instill in their children individual responsibility for their life circumstances. Excuses or blaming others for life circumstances are not allowed. They teach their kids that they create their own luck in life. They instill in their kids a positive mental outlook. They embrace the Australian dream. They embrace positivity and embolden their kids with a sense that life, if you look for it, has unlimited opportunity, irrespective of circumstances. And consequently, you have a kid who's positive, optimistic, and enthusiastic about life. They teach their kids the importance of goal setting, creating a vision, and pursuing their dreams. And finally, what they do is they expose their kids to different activities in order to help them uncover hidden talents and passions. It's just a different way of looking at things. And we're all guilty of doing the exact opposite at any given time. Probably way too often. But at least if we put these up on the fridge and we try and be that person with our kids instead of the person we are, things might change in this country. But I sense, sadly, if Bill Shorten is going to be Prime Minister and if Tanya Plibersek is going to be Deputy Prime Minister within the year, the politics of envy will be rife in this country.
I'd like to say thank you to all of you who've left me reviews on iTunes, Stitcher and all those other podcast platforms, because they help spread the word. My intention is to help more investors become successful, more business people and entrepreneurs become successful by teaching them about property, about mindset, about money. And the more we get the message out, the better this is. So if you could also spread the word, there's a little share button on all the podcast app. Just click it and pass this on to somebody else and leave me a review. That helps me get excited and allows me to keep doing these. What I'm going to do today is read out a review that I received. And remember, when I read out your review, I'm going to gift you a copy of one of my books. You can choose which one. Why not go to michaelyardneypodcast.com/review, leave a review. And when I read it out, email me at michael@metropole.com.au and I'll gift you a book. Today I'd like to read one out from Joe, who sent the following review. Hi Michael, I stumbled upon your podcast and listened to the most recent and the first podcast. I'm a lay investor with 4 properties. Well, 4 properties is more than a lay investor, Joe. I found your content informative and confirming my philosophy, although not everyone I speak with agrees. I found your advice to be honest and truthful, as I've measured and evaluated it against my own experience. For example, your investment-grade property attributes covered in your first podcast and your advice on purchasing in Brisbane also confirm my approach on a recent purchase. Thank you so much for freely sharing your wisdom. I look forward to catching up with you on your other podcasts. Well, I hope since you left that review, you've had a chance to re-listen to some of the podcasts. Now, that's a great thing for you to do over this summer break. Why not download all the old podcasts, listen to them to 1.5 times speed, even if you've heard them before? In my mind, there's lots of information worth listening to a second time, and I look forward to bringing you a new podcast next week.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from today's show, we'd really appreciate it if you would leave a review and we'll read it out on a future show, and Michael will gift you one of his books as a way of saying thank you. Just go to michaelyardneypodcast.com/review and let us know what you think. If you don't already subscribe, head over to iTunes or your favourite Android app. You'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 30 minutes.